Good morning, everybody. Today, we are going to study the admission of a partner. When a new partner is admitted, the old partner's profit sharing ratio will be changed. Then also, their assets and liabilities are also changed. New partner should bring capital. All these are included into the question, into the problem. So anyway, we try to do one question. I want to give one question. Question number 1. Today we study only one question. When we compare with the previous classes, this question is somewhat long. So we try to do only one problem today. Then A and B are partners sharing profit in the ratio 3:2. Their balance sheet as on 31st December 2017 is given. Here, this side is asset side, this side is liability side. First, capital of A is equal to 30,000. Capital of B is 20,000. Then reserve fund 5,000 rupees. Then sundry creditors 45,000. In the asset side, furniture 25,000, stock 20,000, then debtors 10,000, then cash in hand 35,000, and profit and loss account. The asset side shows profit and loss account 10,000. So total 1 lakh in the liability side and asset side also 1 lakh. This is the balance sheet. Liability side consists of liabilities plus profit. Asset side consists of assets and losses. If the profit and loss account comes in the asset side, that means it is a loss. The same profit and loss account comes to liability side, it is a profit. So in this question, A and B faced a loss in the last year, that is 31st December, the year ended 31st December 2017. In this year, they faced a loss of rupees 10,000. So how do we solve this question? Some additional information are also given. A and B are partners. They share profit and loss in the ratio 3:2. Then they earn 5 rupees. 3 rupees goes to A. 2 rupees goes to B. That is the account. That is the ratio. Then balance sheet. A new partner C is admitted. The partner C is admitted into the business. So they make some arrangements. What are the arrangements? Arrangements are also given in the question. Condition number 1, a new partner C is admitted. This partner C should bring a capital of rupees 10,000 rupees. Rupees 10,000 as 1/4 share of profit. Partner C, new partner, brings rupees 10,000. Then, point number 2, stock is valued. Stock is revalued, or otherwise we can say stock to be depreciated. stock to be depreciated by 10%. Then point number 3, debtors is revalued at rupees 40,000. Previously, debtors value is 10,000. Now, debtors is revalued at rupees 7,500. Debtors value is 10,000. Now, it is valued at 7,500. Then, point number 4. Furniture revalued at rupees 40,000. Then one more information, outstanding wages rupees 4,500 not yet recorded. These are all the questions. This is a question. A and B are partners, sharing profit and loss in the ratio 3:2. Their balance sheet, furniture, stock, debtors, cash, profit and loss account. This is the loss because the profit and loss comes in the asset side, means loss. Capital, reserves, reserve fund, sundry creditors, both sides are tallied. C is admitted into the business. So C should bring 10,000 rupees as 1/4 share of profit. Stock to be depreciated by 10%. So its value is decreased. 10% value is decreased. Stock value is decreased. Then debtors value is now valued at 7,500. So this value also decreased. Stock value is decreased by 20,000. Debtors value also decreased by 7,500. If the asset value decrease, means it is a loss. If the liability value decrease, means profit. Asset value increase means profit. Liability value increase means loss. So, first point, stock value is depreciated by 10%. So, 10% at 20,000 is equal to 2,000 rupees is the loss. Debtors value 10,000. Now it is valued 7,500. So 2,500 rupees loss. Then point number 3. Furniture is revalued at rupees 40,000. Previous furniture value is 25,000 rupees. Now it is revalued at 40,000 rupees. So 15,000 rupees profit. Then one outstanding expenses, one liability, outstanding expenses is not recorded in the book. So this amount is also a loss for the business. So with the help of this information, we have to prepare the revaluation account. Then we prepare the capital account. Then we prepare new balance sheet. With the help of this information, we try to solve this question. First, we do revaluation account. Revaluation account consists of two sides. This side is debit side, this side is credit side. Revaluation account. In the revaluation account, this furniture, this stock, this debtors, this outstanding expenses are taken into consideration. So, furniture value is increased with rupees 15,000. Previous value 25,000. Now it is valued at rupees 14,000. So, 15,000 rupees is the profit for the partners, old partners. So, all the profit items are entered in the credit side, losses are entered in the debit side. Furniture 15,000 is a profit. So, this profit is entered here by furniture rupees 15,000. Then stock value is stock is to be depreciated by 10%. So 10% of stock, 2000 rupees is the loss. So this 2000 is under the debit side to stock. Then debtors. Debtors is an asset. We are expecting 10,000 rupees from our customer. Some of the customers fails to pay 2,500. So now it is valued. So 2,500 is doubtful debts. So 2,500 doubtful is considered as loss. So two sundry debtors, 2,500. So this stock is taken into account, debtors is taken into account, this furniture is taken into account, one outstanding wages 4,500. This 4,500 is not recorded in the previous balance sheet. Now this outstanding expenses is taken into account. So when the outstanding expenses is taken into account, it is a loss. So it is entered here. Two outstanding wages 4,500. Thus, revaluation account is completed. We try to close this account. Draw a single line here. Here also draw a single line. Then write the highest amount. This side total is 15,000. After that, draw two lines. Here also we write 15,000. 15,000 minus this amount. 2, 4, 8, 9,000. 15,000 minus 9,000 is equal to 6,000 rupees. So 6,000 rupees is entered here. It is a profit. To profit, this profit is transferred to old partners in their old ratio, A and B, in their old profit share ratio. Old profit share ratio is equal to 3:2. So A's portion is equal to 6,000 into 3 by 5. B's portion is equal to 6,000 into 2 by 5. 3 plus 2 is equal to 5. 3 by 5 is to 2 by 5. So we have to simplify it. 1, 2, 0, 0. 1,200 into 3, 0, 0, 6. 3,600. Then 0, 0, 4. 2,400. Total is 6,000. So the profit 6,000 is transferred to A's capital and B's capital in the ratio 3:2. So A is eligible to get 3,600 and B is eligible to get 2,400. If we total 3,600 and 2,400, we will get 6,000 rupees. Then we do the capital account. Capital account, we draw a capital account. There are capital account. This side, debit side, credit side. Then debit side, there are three partners, A, B and C. So three partners columns are taken into account. Then first this column is A, this column is B's column, C's column. Here A's column, B's column, C's column. Then first we write capital of A and B. This 30,000 and 20,000 is entered first. By balance brought down. A's amount 30,000, B's amount 20,000, C is the new partner. New partner C should bring rupees 10,000. So next line we should write by bank. C's capital, he brings 10,000 rupees. So 10,000 is entered there. Then this revaluation profit is entered here. revaluation account shows profit of 3,600 and 2,400. So by revaluation profit, revaluation profit is 3,600 and 2,400. C is not eligible to get the previous profit. Then first we write capital. By balance brought down 30,000, 20,000. C is column dash. By bank, C should bring 10,000 rupees. By bank, A is column, B is column, put a dash, and here C is column 10,000. Then revaluation profit. The partners, that means old partners A and B are eligible for this profit, 3,600 and 2,400. C is not able to get the, not received any profit. Then next point, in this question there is one reserve fund. Reserve fund is just like a profit which is not shared to the partners. Now the partners want to share this profit, this reserve fund. So this reserve fund is entered here. This side is a favorable side, this side is an unfavorable side. By reserve fund is taken by A and B in the ratio of 3:2. 3:2, A is eligible to get 3,000, B is 2,000. If you divide it by 5 and multiply it with 3, so A gets 3,000 rupees, B gets 2,000 rupees. C is not eligible. Then, so liability side, everything is entered. Then, here there is one profit and loss account. Normally, profit comes in the liability side. I already told profit comes in the liability side. Losses comes in the asset side. This loss is also taken by A and B to profit and loss account. This 10,000 is divided by old partners in their old proportional ratio. That is 3:2. So, A is eligible to get 6,000 rupees. B is responsible for 4,000 rupees. These are all the items entered here. Then we close the account. Capital account also we are going to close. First draw a single line here. The same single line is entered here also. We just totally 30,000 plus 3,600 plus 3,000 is equal to 36,600. 36,600. Then B's column 20,000, 22,000, 24,400. 24,400. In C's column, just 10,000 rupees. Write the highest amount in both sides. 36,600, 24,400 and 10,000. And we close the account. Here we write to balance carried out. 36,600 minus 6,000 is equal to 30,600. 24,400 minus 4,000 is equal to 20,400. 10,000 minus 0 is equal to 10,000. By to balance carried down, here we write by balance brought down. 30,600, 20,400, 10,000. Thus, a revaluation account and capital account are completed. Then we prepare the new balance sheet. In the new balance sheet, we just copy the old balance sheet, but the changes are also to be made. For example, furniture value 25,000. Now the furniture value is 15,000 is added. So furniture value is 25,000 plus 15 is equal to 30,000. Then stock value 20,000 minus 2,000 is equal to 18,000. Debtors 10,000 minus 2,500 is equal to 7,500. Cash 35,000 plus C is capital 10,000. So cash value is 45,000. This profit and loss account is not comes in the new balance sheet because already this loss is taken by old partners. So this loss is not taken in the new balance sheet. Then capital account. We are having on capital account. All the balances are writing one by one. Then reserve fund is not taken into account because already this reserve fund is taken by old partners in their old ratio. Reserve fund is already taken. Then sundry creditors, there is no change in the sundry creditors value. There is one more information, outstanding wages 4,500. This outstanding wages amount is entered here. So I just rough the question and write the answer here. New balance sheet. Balance sheet of A, B and C as on 31st December, when the new partner is admitted 31st December 2017. Balance sheet of A, B and C as on 31st December 2017. C is also admitted. C's name is also comes to the new balance sheet. This side is an asset side. This side is a liability side. Here there is no debit and credit. In the account only shows debit side and credit side. In the balance sheet, there is no debit and credit. It is an asset side and liability side. It is a statement. So this side is an asset side. This side is a liability side. Then write all the information one by one. First we write capital. Capital A, B and C. We are having a capital account. Capital account balance is taken into account. 30,600. 20,400 and C's capital is 10,000. Then in the balance sheet there is one more information, sundry creditors. Sundry creditors value is rupees 45,000. One more information, outstanding wages 4,500. Outstanding wages 4,500 comes in the liability side. Then we write all the assets one by one. First asset is furniture. In the previous balance sheet, furniture value is 25,000. Now 15,000 rupees increased. So we come to add appreciation. Appreciation 15,000. So the total value is 40,000. Then stock. The stock value is 20,000. Previous balance sheet stock value is 20,000. Now the stock value is decreased 2,000. So less depreciation 2,000, write 18,000 here. Then third information, debtors. In the previous balance sheet, debtors value is 10,000. Now its value is decreased. Debtors value is decreased by 2,500. So here it is not a depreciation, its value is decreased. So we simply write provision for bad debts. Provision for bad debts, its value is decreased. Provision for bad debts 2,500 less 10,000 minus 2,500 is equal to 7,500. Asset values are decreased, so we can use the word depreciation. Debtor is the person. So we give some provision for bad and doubtful debts. This amount is doubtful. So that is why 2500 is subtracted from debtors. Then cash. Already we have 35,000 rupees cash. Now add C's capital. C brings 10,000 rupees. So C's capital 10,000. So total 45,000. The reserve fund and profit and loss account is not taken in the new balance sheet. The reserve fund is taken by old partners in their old ratio. Likewise, profit and loss, that is loss, is taken by old partners in the old ratio. So these two items are not taken in the new balance sheet. We just total it. If both sides are tallied, our balance sheet answer is correct. So we simply total it 0, 0, 6, 10, 15, balance on 5, 10, 5, 6, 1 lakh, 10,500. Here also we total it 0, 0, 0, 0, 0, 5, 5, 5 plus 12, 20. 6, 7, 1 lakh 10,500. Here also 1 lakh 10,500. So this is the procedure for solving the question. First we take the revaluation account. The principle of revaluation account is in the credit side all the profit items are earned. All the expenses are entered here. Furniture value is increased, so it is a profit. 15,000 is profit. Stock value decreased, so 2,000 is a loss. Sundry debtors value is decreased, so it is a loss. One more liability comes, outstanding wages, so it is a loss. 4,500. Totally 15,000 minus this amount, we will get 6,000 rupees profit. This profit is taken by old partners in the old ratio. Capital account. This side is a favorable, this side is an unfavorable side. Previous balance sheet, A is capital 30,000, B is capital 20,000. C brings 10,000 rupees. Revaluation profit is entered here. Reserve fund is entered here. Loss is entered here. Then we balance it. Balance it. We will get 30,600, 20,400 and 10,000. In the balance sheet, the previous balance sheet amounts are normally comes with some changes. Furniture value 25,000, add appreciation 15,000, so total value 40,000. Stock value 20,000, less depreciation 2,000 rupees decrease, so value is 18,000. Debtors value previous balance sheet shows 10,000 rupees. There is a provision for doubtful debts. Sundry debtors value decreased by 2,500. So 2,500 is subtracted. We will get 7,500. Cash. Already previous balance sheet shows a cash of 35,000. Now C brings 10,000. Totally 45,000. Asset side total is 1,10,500. The liability side total A is B is C is capital. This amount is taken from capital account balancing figure. Balance carried down, balance brought down. 30,600, 20,400 and 10,000. 30,600, 20,400 and 10,000. Sundry creditors, there is no change in the previous balance sheet and fresh balance sheet. Outstanding wages, one additional liability comes 4,500. If we total it, both sides are tallied. Dear students, try to do the remaining problems which is given in the textbook. Try to do it. God bless you.